And we are live. Awesome. So for the most part, my Facebook audience kind of knows my format already, but hello, YouTube. This is the first time that I'm tossing a live stream up in here, and hopefully this will just be the start. I didn't really do a ton of pre-planning for this one, and the main reason why is because there's plenty to talk about in general, just because of the current state of the market. And additionally, I thought that this was a great time to hop on YouTube for the first time and discuss how ugly things look right now. No better time to learn about the market for the first time than when it looks like this. So let's take a quick look at what the stock market did yesterday for starters. The Dow Jones is beneath its 20-week moving average as well as its 50-week moving average. NASDAQ, more of the same. S&P 500 has not gone beneath its 50-week moving average yet, but it's trending in that direction. Once the market opens on Monday, that's definitely a possibility. What's interesting among all of this is the dollar has still been struggling. We'll see what happens next week. There could be some follow through here, but as of right now, it was down as of Friday, even with all of the stock related stuff dumping. Usually, when the stock market or the crypto market dumps, the dollar is rallying. So the dollar actually is failing to rally as well as the stock market. So that's an interesting progression that's worth taking a look at. But the primary reason that I wanted to do a video today is mostly to cover the crypto market because of the fact that I've gotten so many messages asking what is going on, why are we going so low, et cetera, et cetera. And I'm not going to lie, I'd argue most analysts and traders alike did not expect us to go this low on this recovery. Primary reason why is that we held this level as strong support back in September, this 40K level, and we failed to do that here. So let's take a look at some of my macro indicators and we can kind of figure out what's going on here. Now, one thing that I want to mention is that these markets, both the stock and the crypto market, markets in general, are engineered to become a psychology game. Because human psychology is relatively predictable and the actions that we take in the markets are relatively predictable. And what I mean by that is most people that got into the crypto market came in here and it's probably like right around here, right? So this section and this section is where a lot of people in the crypto market were doing a ton of their buying. And a lot of people got scared out in this range. And I think the volume profile kind of shows that, right? I mean, it's been a pretty crummy downward slope since we peaked out, right? I'd say that is a pretty clear downtrend in volume. And then anybody that was left over that didn't get scared out of this bear market here were largely responsible for pushing this up, but we ran into that exact same resistance. And this is obviously what you'd call, a double top structure. Not that that really matters a ton, but great time to apply for your job at McDonald's. Anywho, one of the primary areas that I think we're likely to get some sort of a bounce because we sure as heck didn't get one at 40K is where this 100-week moving average is. And the main reason why is because there's a confluence with this log regression rainbow that I use. So this rainbow is just matching Bitcoin's price data to these regression bands, right? And the higher you get on this rainbow, the less data that it's using to match those regression bands. For example, this very top regression band is literally just pulling data from that 2013 top, and we have gotten nowhere near it today. In fact, if you had the same return on investment from the 2013 cycle, Bitcoin would be worth about $800,000 today. We're not anywhere near that. And the same goes for 2017. We got pretty close to this yellow log band here. If we had the same return on investment as 2017, Bitcoin would be worth $400,000 today. I don't think that's happening anytime soon. And the primary reason is this law of large numbers when it comes to market cap. right? So if you want 100% gain on an asset, you can have let's say the market cap of that asset is $1 million. You would need $2 million to obviously get a 100% gain and more or less double your investment. If you want to get a second 100% gain at $2 million, you need an additional $2 million. Now your market cap is $4 million. If you need to double that, you need another $4 million. So every single time that you want to receive the same return on investment, you need more and more and more capital each time. So Bitcoin, well, it no longer is, but at one point was a $1 trillion asset. To get 100% gain, you need an additional $1 trillion. That takes a lot of time and capital and patience to push the price up to those levels. So what was previously possible over here is just simply not going to be possible over here, because you need order of magnitudes more capital to put into the market to get the same return on investment. So that's one thing to mention about this log rainbow here. The other thing is that I have the shaded region. The shaded region is where Bitcoin spends the majority of its time for the most part, right? Because you have bull runs and then you have accumulation phases. And the bull runs are relatively short in comparison to the accumulation phases. So what you'll see here is the people that spent, a lot of time accumulating here did really well in 2017. And the people that spent a lot of time accumulating here did really well in 2020 and 2021. People that decided to enter the market for the first time here or here and then got bored with the market as soon as they weren't getting a return on their investment anymore are the people that didn't do very well in this market. I think that success in investing in the market requires a consistent strategy. If you're buying into hype and then getting bored with it as soon as things aren't hype anymore, you're not going to have any success for the most part. Chances are you're gonna get bored with the market at the times where you should best be buying. So back to what's going on with the market right now and where we could bounce. From a technical perspective, this bear market is significantly worse than the assumption. We've also lost, like I said, that strong support at 40K that we originally held, right? We were able to bounce here, hold that, and then set that new all-time high. And last time we held this logarithmic band as support, my buy zone, what I'd consider it as support. And this time we have very much failed to hold it as support, and we're headed down to the second band. Now, there's a confluence at this band and the 100-week moving average at $31,000. So, and, we can wick beneath that, no problem. I'm not really worried about that. But personally, at this rate, that's where I'm looking for us to bounce. And that's probably where I'm going to be looking to start accumulating, right? By the way, for anybody that's here, either on YouTube or Facebook, if you have any questions whatsoever, feel free to ask them. This whole thing is a lot more fun when there's participation. I can respond to any specific questions or comments that you have in the process. Otherwise, I'm just going to keep talking and hopefully you enjoy the content. By the way, YouTubers, if you are witnessing this and you like what you're seeing, give me a thumbs up. Get that algorithm moving so that my face appears in more random people's feeds and all that fun stuff. If you want some worst case scenario possibilities here, we could visit $23,000. It's the log band beneath that. And then the very lowest log band is at $17,000. And just for reference, we've only broken beneath this last log band once ever in the asset's history, right? You can go on all the way back just to show you proof of that. And it was just for a brief moment on a wick because of the COVID-19 capitulation. And then we recovered from that. And look, anybody can tell you this was probably the best buying opportunity of a lifetime for Bitcoin. The gains that you made in the time frame that you made it were absolutely massive. And again, like in this shaded region, personally, I'm buying. Like that's my strategy. When we're in this region, I think Bitcoin is undervalued. Max asks, I want to invest and I have no idea where to begin. Do you have any resources you recommend for beginning that journey, especially with regards to savings? So I can't exactly tell you, what strategy is going to work best for you because I think that's a very different strategy for a lot of different people. For example, if you don't feel like you have a ton of money to invest, that's a different situation than somebody that does have a lot of money to invest. And if you're 25 versus 50, that strategy is different. It depends what your appetite for risk is. It depends if you're trying to gain profits or just protect the money that you currently have and things that are less volatile, right? There's a lot of different options, but one thing that I will say is that finding an asset that you like and then executing a consistent strategy on that asset will always pay better dividends than just having a haphazard way about going about the market and buying into what your friends tell you or what Reddit or Twitter tells you or things like that, right? So my personal strategy is that I dollar cost average and I dollar cost average heavier during times that I think are low risk to do so, and less during times that I think are high risk. For those that don't know what dollar cost averaging is, it just means executing a consistent buy onto the market, usually at a monthly rate. And I can show you why this is such an effective strategy for any investor, regardless of your level of experience, right? It doesn't require you to be a trader to dollar cost average effectively, not even close. So let's say you had $12,000 that you wanted to put into the market. Wow, that is the worst two I think I've ever drawn in my entire life. There we go. So a lot of people, when they're getting into the market, they'll usually first get that inclination they need to get in when they're missing out on something, right? They have a fear of missing out, and they will get in when there's already a lot of upwards price movement. So a lot of people in the crypto market got into the crypto market for the first time in this range, right? If you bought all that you plan to buy for the foreseeable future in this range, you've had a rough go the past year and a half, right? So let's say that your average price when you're buying up in this range was like $58,000 or something like that, right? I mean, it could have been worse, right? You could have bought maybe the tippy top at 60 something K or whatever. And then you got dumped on and you had to deal with this horrible bear market where you were down about 50%. And then we finally recovered and you finally were in profit. And then that was taken away from you in an instant, right? And your $12,000 has made you absolutely no money in the past year. Or you can dollar cost average. And what that is taking that amount and breaking it up into monthly buys. And by executing on that strategy, you might have still had some bad buys in this range, but it would have been once a month. So let's say you got in March, right? So you have a 60K buy in March, 1, 2, 3, 4, and then you had, late April, another 60K buy, and then this bear market hit. And then you had, your May buy was like 33,000, and then your June buy was like 33,000, and then your July buy was like 30,000, and then, so on and so on. And all of a sudden, your average is in a much better spot, right? It might not be perfect, but maybe it's like, 40,000 or 35,000 as opposed to 58,000. And right now, well, yeah, we're in a bad spot in the market. You probably would feel a lot less stressed about your financial situation if you're down a total of like 10 or 15% rather than down, 52% like some people are right now. So that's the concept of dollar cost averaging. If you're looking to get into the market for the first time, you should find an investment that you fundamentally believe in, that you think there's a reason for it to appreciate in the future, and then you should execute a consistent buying strategy over the long term. That's the best way to get into the market. And I don't care if it's crypto, I don't care if it's stocks. That general principle is a good way to go about it, regardless of what it is you're investing in. And then people like me, And I do some trading, and I have a trading portfolio. I allocate about 15 to 20% of my portfolio to some level of swing trading. I don't day trade. I don't use leverage. I trade exclusively spot. But you can take this another level and then say, well, I have this logarithmic regression rainbow here, and traditionally in the shaded region are decent times to buy, and the lower we get down in the shaded region, the better it is to buy. So for me, I dollar cost average more heavily during this period, right? When we're in this shaded range, I'm dollar cost averaging more heavily. And then when we're not in the shaded range, I'm more likely to take profits and mess around with some swing trades and sit on some cash to buy dips with and stuff like that, right? And my strategy isn't perfect, and I 100% make mistakes. I think a primary example of me making a mistake is, I did not anticipate this would turn into this, period. And I wasn't sitting on as much cash as I probably should have been during that time. But that's totally okay, because at the end of the day, I'm executing a consistent dollar cost averaging strategy on the way down, and also I did have some cash to re-enter on the way down as well, right? And I'm not trying to claw my way back up to previous levels. I'm trying to accumulate more of the asset that I like, so that next time we're back at those levels, I have more US dollar because I have more of the asset, right? So hopefully that made sense. I appreciate the question. And you're more than welcome to message me, if you have any additional questions or anything like that. So another thing that I just kind of want to take a look at is the altcoin market and its valuation versus Bitcoin. So the first thing we're going to take a look at is the total crypto market cap. It's in a bad place. It's clearly in a bad place. So the lowest that it reached during the summer levels was about $1.12 trillion. Currently, we're sitting at about $1.55 trillion. So not quite as low as we were in the summer, but if we take a look at the relative strength index, which just calculates the momentum in the market and the momentum of the moves that are being made, we're lower on the relative strength index than we are here. So there's a divergence there, right? We're higher as far as price level goes, or market cap level in this particular instance, but we're lower as far as the momentum goes. So that could be something worth keeping an eye on. Could suggest that there's further downside ahead, and that's okay. Again, going back to that log rainbow for just a moment, right? The one beneath us is 31,000. I think that's where we're most likely to bounce at this rate. There's 23,000 and 17.5 beneath us, and those are possibilities, right? They become less probable the further we go down, but they're absolutely possible, 100%. So anyways, back to the alt market here, right? Another thing we want to take a look at is Bitcoin dominance. And as you can see here, that's bouncing, right? So if the market in general is trending down, and Bitcoin dominance, which is how much of the total market is dominated by Bitcoin primarily versus all of the altcoin options that you have out there, that spells horrible news for altcoins. And we're already seeing that. This entire section here are altcoins versus Bitcoin or Ethereum in a couple instances. And as you can see, it's all red, which means the altcoins are going down significantly worse than Bitcoin is, right? And this kind of makes sense because Bitcoin is more risk off, even though it's a very volatile and in many ways risky asset. It's more risk off than all of the altcoin counterparts. So, you take a look at assets like ADA that are currently down 70% from their all-time high, or at least wick down that low. DOT, which is one of my favorite assets that I dollar cost average and accumulate heavily, and I'm not afraid to say that, is still down 70%. DOT at one point was down, 80% on the US pair, and it looks really ugly versus Bitcoin as well, right? I mean, this is not what you want to see. It's respecting all these levels that I've drawn out well. So this right here, might be a decent buy opportunity, but it could also go, back down to those lows that we had in the summer. So all of this stuff is worth keeping an eye on. But I can say this is that people that are dollar cost averaging and just executing on that strategy are the people that don't really mind these dips. I know, I had a lot of people messaging me the past couple days, panicking and asking where I think the market's going to go. And I gave them honest answers. But at the end of the day, like, there should be no cause for concern if you genuinely believe in these assets that you've invested in, and you're executing a consistent strategy on it. Dot retesting that fib makes me want to go double my pile. Yeah, it definitely is at a good spot, both on the Bitcoin and the USD pair for a buy. I mean, $17 dot is a dream come true. And Joe, who's been a huge help in my investment journey, by the way. I mean, we are both in agreement that Dot's great tech, right? It's an altcoin, but it has good fundamental technology, and there's good fundamental reasons to dollar cost average into it. Another thing that I just want to mention, and I'm sorry to be pessimistic like this, but let's just take a look at this because I think it's worth taking a look at because I think there's a lesson here. And you know what? Let's pull up its counterpart too, because why not? We got our favorite assets, Shiba and Dogecoin. And the reason why I'm pulling these up is because they tell a story. And that story is Dogecoin topped out about a week before Bitcoin crashed. And Shiba topped out, I don't know the exact date of the Bitcoin all-time high, about 2 weeks before Bitcoin crashed. Oops, that's my bad. And I personally think that next time the market looks bullish, it's not going to happen until the market is pretty confident that assets like this are not coming back anytime soon. I think this bear market is going to be uglier than the last one in the summer for a lot of people, because it is at least clear to me that people didn't learn their lesson from the summer bear market, which means we need to bring on a little bit more hatred towards the market in general. Because when Doge topped out, right? Again, this is, that's pretty clear top signal right there. And by the way, I wouldn't expect this particular asset to recover anytime soon, but that's neither here nor there. And then, there was this run up of this asset that had no fundamental value, and on top of it, there was a bunch of leverage in the market, right? A lot of people leveraging their positions with debt, with money that they don't have, that they would owe if they were wrong on their position. And that's exactly how you get, these giant liquidation cascades like you have here, right? This is just flushing out garbage and leverage in the market. And the exact same thing happened here, and the exact same thing, we're right in the middle of it right now. Absolutely. Where anybody that has any sort of leverage position is that I guess isn't a short is probably sweating pretty hard right now. So anyways, I think that this entire thing was a flush out of that leverage, this whole summer market pattern here. And then we recovered, and then people started making those exact same mistakes with just, they picked a new silly asset to pump up, and now that silly asset's probably going to find a floor, pretty far down from its all-time high. I mean, we're already down 78% from its all-time high. I don't think there's any reason to believe that we couldn't go down further, right? 85, 90% from its all-time high. Who knows? But that, and then you had another flush of leverage. So unlike last time, I don't think we can go 3 months and just be back to a regularly scheduled programming. First of all, there's all these reasons why I think we need to make sure people that come into the market for these reasons are permanently flushed out. But on top of it, the general market trends are a lot more bearish than they were, right? The stock market looks horrible versus what it looked like in the summer. We're obviously planning on doing Federal Reserve interest rate hikes, which, by the way, I think is very much priced into the market already. I think by the time the rate hikes actually happen, there's going to be very little price movement on it. Joe wants to ask about Wonderland and what impact that had on this dump. And for those that don't know, which I didn't know until Joe decided to pop in and tell me that this was a thing that existed, is that um, people were collateralizing their crypto to take out crypto loans to put it in Wonderland, which was paying like, absurd amounts of annual percentage yield. Like I'm talking like in the thousands, I'm pretty sure. And the inevitable result of that is the floor came out underneath it, and a lot of people owed a lot of money that they didn't have. I mean, and that's textbook on why we're getting these liquidation cascades. Maybe not as much with Bitcoin, but Ethereum and the rest of the alt market. That's why they're bleeding so much harder. So yeah. And again, I trade spot. I don't mess around with leverage. I think in a market where you have an asset that can appreciate, 136% in 8 weeks, or another great example is an asset that can appreciate 420 nice percent in a matter of 3.5 months, roughly. I personally don't see a reason to mess with leverage in a market that's volatile in the first place, and I think that it's more likely to hurt you than it is to help you. My strategy, slow and steady, wins the race, and that has seemed to work out with me okay. Right. The last time we were at this price level, I had a lot less money than I do this time. We're at this price level, and that just tells me that okay, the strategy is working all right. By the way, taking a quick look at RSI here. DOT is the most oversold that it's been in a very long time. We didn't even get this oversold in the summer. This is the most oversold it's ever been, period. So again, if you like DOT, I personally like DOT. I think it's a good asset. I think it's a good one, dollar cost average into. It's the most oversold it's ever been. Just food for thought. Yeah, I mean, the main reason that I'm here is to hopefully at least a little bit calm down the people that are absolutely freaking out right now. Because if we look at the math with this stuff, I'm just going to pull this log band back. Like, statistically speaking, this is a great area to accumulate. And I can see what I kind of foresee happening here is, something like that probably, right? I think we're going to settle back down at 30K, and we're going to spend a lot more time there than we did last time. And it's going to scare a lot of people before heading back up. I don't think we're in for, a year or 2 year long bear market. I think I do legitimately, people might not, agree with me on this, but I do legitimately believe that we will see new all-time highs for Bitcoin in 2022. It's only January. There's 12 months for that to happen. And I think it's more than possible. But I think this bear market's going to be, uglier than the last one, because it seems like we needed to flush out all these people that like to invest in random altcoins that have no fundamental use case and things like that. And Bitcoin can't be healthy when that's happening in the market, right? Because money that you would put in Bitcoin, you're instead putting into Shiba to try to get a 400% gain on, while in the same time, Bitcoin's just going up incrementally. It's not interesting or entertaining. So I think we need to, in a large part, confirm that those people aren't really coming back anytime soon before Bitcoin can really start to make a move. And when this market goes bullish again, Bitcoin's going to tell the market that it's time to go bullish. I think that, right, it's going to look a lot like this, where Bitcoin's running up like crazy and the alts are lagging behind, respectively speaking, right? During this run here, Bitcoin was showing who's boss, and the alts, while they were going up in their United States dollar value, were not going up on their versus Bitcoin valuation. So just something to consider, right? If you are going to spend time dollar cost averaging in this market during this bear market, which I think is a good move to make, which, not advice, but statistically speaking, these are low price levels that are good to be buying at. Bitcoin is probably going to be the thing to lead the charge once we're out of this bear market. So something to consider if you plan on dollar cost averaging in a few different assets. I do want to take a look. Oops, let's get rid of that rainbow. I do want to take a quick look at gold too. I think it's only fair, considering the fact that gold and Bitcoin are kind of in a race for being an inflation hedge. I mean, and one thing to consider is that, gold has spent more or less a decade in the same range here, right? It's been, we'll consider this, a fake out breakout, right? And we just have this giant decade long accumulation range. Wow, that was a horrible line that I just drew. That's a little better, right? You had some topping there, you had some bottom set here, and we're topping out again, and maybe we're going to break out here. But one thing to mention is, a lot of people a lot of people are making this argument already, that gold is a better inflation hedge than Bitcoin, and people are also asking, John, why if Bitcoin is an inflation hedge and we're experiencing, high levels of inflation, that Bitcoin's going down right now, shouldn't it be going up? And my answer to this was, okay, yes, let's say we do think Bitcoin is an inflation hedge. And we foresaw inflation happening back in March 2020, and we started printing more money than we have ever printed in the history of the United States. And if you want to see the graph on that, that's what it looks like. You can see just the massive increase in the trajectory at which we printed money. So, okay, let's hedge this inflation. And then we ran up from that point on over a 10x gain, right? For some people, if you bought that bottom wick, it was probably like a 13 or 14x gain. Let me see. I mean, bottom to top, like very bottom to very top is a 1700% gain. Personally, I'd say you hedged the shit out of that inflation. You hedged it, you won, right? And then with that, you're going to want to take profits, because if you don't take profits, you didn't hedge inflation. You just have things sitting in an asset like Bitcoin. And as much as I like Bitcoin, it's a store of value. It's not a currency, right? People, and don't get me wrong, it has properties that are currency like, and has functionality that can be used as a currency. But I'm not buying coffee and my groceries with Bitcoin. I'm holding it and storing value inside of it as an inflation hedge. And then when I want to go buy things with that, once I hedged my inflation properly, I can take profits back into the United States dollar. So if you hedged inflation and you were up 1700%, I would probably take profits. So yes, short term, it's a very volatile asset. It has ebbs and flows up and down, 50 to 100%, drops, or sorry, 50% drops, 100% gains in one direction or another. But long term, is this asset appreciating versus the United States dollar? That's all you need to ask yourself when you're asking, is Bitcoin an inflation hedge? Is it appreciating long term versus the value of the United States dollar? And I think this graph tells a pretty great story on making that argument that this asset will appreciate long-term versus the United States dollar. If you have any arguments against it, let me know. But this looks like we're appreciating long-term against it. If you want to take it linear scale, it even gets more fun, right? It looks ridiculous. Depending on when you got in, and even when you're getting in now, it is one of the greatest assets that you could have possibly invested in your lifetime. It's appreciating against the United States dollar, full stop, period. Another thing that I want to take a look at, because people are calling this a bubble crash, or a dot-com bubble crash. They're comparing it to the dot-com bubble. So let's take a look at that, because I just want people to kind of be aware. So obviously this range is a lot larger. Again, we're looking at a decade-long range versus about a year and a half, 2 years, depending on how you scale it for Bitcoin, right? And again, excuse my not great line drawing. We have this initial run up. We have a top. We have a bear market. We have a recovery. We have a higher high. We set a new all-time high, and then we crashed and went lower than the bear market in between, right? So for Bitcoin, that would be running up to 60K, crashing, holding 30K support, setting a new all-time high around 60K, and then, I don't know, coming down to $25,000, right? Scaring some people, really scaring some people right here. People are going to freak out if that happens for Bitcoin. And then with the stock market, we recovered, and we've been in an uptrend ever since, basically, right? So, people that are scared right now, their time horizons must be short, because to me, it doesn't take a whole lot for me to hold on to an asset for a year, right? I don't think that's a necessarily difficult thing to do. If you're in this game for the right reasons, I think that that's not a difficult thing to do. Um, and I do just want to say the market psychology aspect of this is very similar to what we saw in the dot-com bubble, which was the internet was going to produce value, right? Everybody knew the internet was a good idea. It was probably going to change the way that our society worked in some very big fundamental way that's going to create a lot of value. I think looking back, 25 years in hindsight, we can say we were correct on that thesis. But back when everybody was starting to figure that out, they were investing in anything that was adjacent to the internet. It was anything possible that seemed like it was related to the internet. Oh, we're going to go up, right? So you think that this value is happening, but you don't actually know what's going to be the thing to produce that value, right? So everybody thinks cryptocurrency is the next big thing. The countries everywhere are printing a bunch of money. It decentralizes and democratizes the entire financial industry. There's a lot of value to this idea that we don't need to go to banks and brokerages to manage our finances and all these other awesome things. But that doesn't mean that every single asset that's in this space is going to do that for you. In fact, the vast majority of them are not going to do that for you long term. And, they might run up like crazy in the short term, but they'll come back down to reality if they can't put their money where their mouth is. And I think that's what we're seeing in this altcoin market right now. I mean, look at these drops on some of these altcoins. They're horrible. They're really, really bad. So, just something to consider, right? I think you should be very confident in the fundamentals that you're investing in if you're a long-term investor, period. If you're trading, this is a different story, right? And you can trade whatever you want and you can take profit whenever you want. But if you're a long-term fundamental investor, then you need to be really careful about what you're investing in as far as long-term value. And this is just going to drag Bitcoin down with it as people figure out what actually has value in this space and what doesn't, because a lot of it's garbage, full stop. So Bitcoin's not going to bleed as hard. And when we recover, Bitcoin will be just fine, but it's a good thing to keep an eye on, right? So, Bitcoin and Ethereum, they're probably going to be around for the long haul. I think they've made a decent case for why they're valuable parts of the cryptocurrency space. Everything else, do your own research. It's up in the air. There's definitely plenty of stuff that I think is good fundamental tech and good fundamental value, but that might differ from you, So just make sure you're checking in on that. I think that's for the most part. I'm gonna go ahead and leave it up to the comments if you guys have any questions. Hopefully you guys found this information resourceful, and we'll make it a mini therapy session. Say everything's gonna be fine. It's gonna be just fine. Again, I think we will see new all-time highs for Bitcoin before the year is over. We have 12 months to do that. We went from a price level $5,000 below this to a new all-time high in 100 days, roughly, right? So if we can do that in 100 days, I don't understand why we wouldn't be able to do that again in 330 days. We have 3 times the amount of time, by that metric. And I think it will be earlier than that even. I think things will start to look bullish again, a good way, probably midway through the year or something like that. And again, I mean, this is just speculation. I don't take this stuff to the bank, but I definitely think that, anybody that's panicking right now might look back and regret any panic emotional decisions that they made in this moment. Another thing I want to take a quick look at is the Heiken Ashi candles. I've been really influenced by a YouTuber by the name of Ben Cowan. He's a fantastic analyst, and I would highly recommend, if you're trying to learn more about this market, to give him a follow. But one thing that's great about these candles is that it filters out a lot of noise. And you can see that it just says, are we in a downtrend or are we in an uptrend? That's essentially what these candles are telling you, right? And we are very much in a downtrend. And what's crazy to me about this downtrend is there really has been no rally to the upside, no, dead cat bounce, no, pump to exit on. before it continues to dump. It's just been this brutal downtrend for weeks and weeks and weeks. And yeah, we've had if we go back to the regular candles, we had what, like a kind of a blue week there, a decently legitimate blue week there. Sorry, I use blue and purple candles, so you can filter that into red and green if you want. And then a really pathetic blue week there, and we've essentially just been dumping on this really ugly downtrend. So one thing I want to do that I haven't really looked at is what's the longest we've gone consecutively with just straight downtrend. So on this one we have this blue one that offsets it. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. It's 11 weeks of downtrend. If you exclude this one, it really is more like 14 weeks. This one we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right. So we're about the length of this downtrend is about the same length as the summer bear market. And now going back, the only comparable downtrend that lasted that length was the 2018 capitulation, right? And even this had like these little, exit rallies to say, get the hell out of this market, while the getting's good before it dumps again. But you had 5 consecutive weeks, small recovery, 4 consecutive weeks, small recovery. That's 1, 2, 3, 4, 5, 6, 7. Small recovery, and then here's where it really got bad. I'm going to consider this guy a red week and this guy a red week and just say we had, straight up like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 capitulation, 11, 12, 13, 14, 15, 16 straight weeks of downtrend. And then we had another 8 weeks on top of that of basically doing nothing before we started to recover again. So, but on the bright side, unless you go back to like 2013 levels or 2013 bear markets, which I just don't think this volatility is really likely to ever occur anymore. I think the market cap is way too big for that to be the case. But I think at most we could go another, 8 to 12 weeks before seeing some kind of rally back to the upside. And that rally might not set us a new all-time high. It just might be a little bit of a relief from just this brutal, relentless bleed that we've been seeing, right? It's pretty ugly. Another thing that I want to mention quickly, though, is that we haven't seen the volume come back yet, right? At all. And I just want to keep an eye on that because, this is probably not going to let up until we have some volume show up again. And that volume is in nothing but a downtrend. You can actually see that little line right there, right? That's the volume moving average. And that's just been making its way down this entire time. So anyways, guys, that's all I got. I just wanted to go ahead and pop in real quick and just kind of share my thoughts on where we're at with the market. Again, stocks look really rough too, right? We can see that. They really don't look great. But I think at the end of the day, this is just a buying opportunity. If you see it as that, and it's going to take time, but what were you in a rush to take profits for? If everybody says I want to be in this for the long game, and then they're thinking about selling 3 months later because the bear market's really bad, then you're probably not in it for the long game. So just make sure you're consistent on the strategy that you plan on having, and you'll be just fine. So anyways, till next time, guys, I can stick around for just a couple minutes if we have questions, but I only see a few people are watching right now. But yeah, I just wanted to, give this opportunity to hopefully calm some nerves a little bit, hopefully just taking a methodological analysis on this and actually looking like where we're at, especially like statistically, is a good way to look at this. It's really not that it's scary in the moment, but if you're looking at this for the long term, I don't see why you should be overly frightened. So, yep. Greg said there's no shame in exiting with profits and waiting for market conditions to change. Net and pocket beats, bro. Hodl with empty pockets. Yeah, no, there's nothing wrong with taking a profit on anything, especially altcoins, because they long-term altcoins do not hold up against Bitcoin. And a lot of them don't hold up against Ethereum either. Link, for example. We thought we had a breakout, but no, back into our downtrend. Link's just been systematically losing value against Bitcoin since, May of 21, basically. Just doing nothing but lose value against it. Ren, which I unfortunately hold a rather large bag of, systematic downtrend versus Bitcoin. Just bleeding. So if you look at these versus Bitcoin, there's nothing wrong with it. I need to get rid of my log rainbow like that. I got to remember to get rid of that. Sorry guys, that's really annoying. I apologize. There we go. There's nothing wrong with taking profits when we're up here. There's nothing, especially back into Bitcoin. You've got more Bitcoin. That's a pretty decent, success story from my perspective. I think that, especially with how volatile this market is, sitting on some cash is never a bad thing. And if that's because you took profit from elsewhere, that's fine. Chances are, given enough time, the market's going to have a 20, 30, 40, 50% drop, and it's going to be ugly. And the people that have money sitting on the side from profits they took on previous assets are the ones that really aren't stressing as hard about this as the people that, bought in at tops and didn't take profits and, are in a worse spot. So worth taking a look at. Any other comments or questions? Doesn't seem like it. All right. Well, we've been going for about 45 minutes. You've heard me ramble a lot. But yeah, don't stray, DCA. Enjoy your weekend, right? If you're allowing this stuff to stress you out on your weekend, you're not doing it for the right reasons. Might just be better to, get into like some treasury bonds or something like that if the volatility ruins your day. I've been having fun. I don't know about you guys, but I think it's been a good time. So have a good one, everybody. Have a great weekend, and I will see you with probably some more concise, subject-oriented content starting next week. But I just wanted to give a picture on the market, where we're at, and hopefully you guys are not stressing quite as hard as you were prior to watching the stream here. Thanks for tuning in. Catch you next time. Peace.